You are watching The Whale Flow, where we don't chase prices. We decode the structure behind them. At first glance, the crypto market looks chaotic, thousands of coins, endless news, hype, and volatility that makes it seem unpredictable. But beneath that surface chaos lies an organized, evolving system, a structure that behaves more like a living economy than a random casino. Once you begin to see that structure, you stop being surprised by volatility and start to understand how money actually moves. The crypto market is not one single market. It is a collection of layers, each with a distinct role, just like the layers of an economy, or even the layers of human civilization. At the foundation are the base chains, known as Layer 1 blockchains: Bitcoin, Ethereum, Solana, BNB Chain, Sui, Aptos, and others. They are like digital nations, each with their own rules, infrastructure, and economy. They secure the network, process transactions, and store value. On top of them are Layer 2 networks, built to expand the capacity of the base chain, to make it faster, cheaper, and scalable for mass adoption. And between these two layers exists the middleware, the invisible systems that connect everything together, such as data oracles, APIs, bridges, and indexing protocols. If we think of blockchain as a city, Layer 1 is the land, Layer 2 is the public transportation and infrastructure that makes the city work efficiently, and middleware is the system of communication, utilities, and data exchange that keeps the whole city alive. But what makes that city worth living in are the applications, the layer where real people interact. That is where DeFi, NFT, Game FI, and Social FI live, where technology becomes experience and experience becomes economy. Beyond that, there are meta layers, movements that extend beyond the crypto space itself. RWA, or real-world assets, connects blockchain to traditional finance. AI combined with blockchain introduces intelligence and automation. And Web3, the grand vision that unites them all, represents the transformation of the entire internet into a global economy of ownership. Together, these layers form one coherent ecosystem, not a chaotic playground, but a structured network of value and information. To understand crypto, you have to understand that it breathes in cycles. Every few years, the same pattern repeats. Money and attention flow from the foundation to the surface, and then back again. The cycle always begins with accumulation, when capital flows into the strongest Layer 1 blockchains. Then it moves into DeFi, where liquidity multiplies, where yields appear, and where capital efficiency grows. As confidence returns, the flow continues toward riskier, more experimental layers, NFTs, Game FI, and Social FI, the stages where hype dominates, where users flood in, and where attention becomes the new form of capital. Finally, when the system overheats, it collapses. Capital retreats to safety, to Bitcoin and stable assets. The market resets, builders keep building, and the next cycle begins. This movement is not random. It is structural. It's the market's natural way of redistributing risk, value, and innovation. Each wave brings in new ideas, new technology, and new users. Most of it will vanish, but what remains becomes the infrastructure of the next cycle. The crypto market evolves the same way the internet once did, from simple websites to social networks, to digital economies that now define the world. Every hype cycle leaves behind something permanent. The eco-boom of 2017 created Ethereum's dominance. The DeFi summer of 2020 built the foundation for decentralized finance. The NFT explosion of 2021 redefined digital ownership. And the RWA and AI wave of 2024 and beyond is now building the bridge between crypto and the real world. What looks like chaos is actually structured evolution. Each phase plays a role in pushing the technology, liquidity, and adoption forward. The biggest mistake most investors make is that they focus only on prices, not on structure. They chase narratives when they should be studying the map. They look at tokens instead of ecosystems. But when you learn to see the market as layers, infrastructure, middleware, application, and meta, you begin to recognize where the flow is moving next. You stop following the crowd and start moving with the current. In the coming episodes, we will explore each layer in detail. Layer 1, the digital nations that form the foundation. Layer 2, the scaling solutions that connect millions of users. Middleware, the hidden infrastructure that keeps data and liquidity flowing. Then we move into DeFi, the beating heart of blockchain finance. NFT, the evolution of digital ownership. Game FI and Metaverse, the expansion of human experience into virtual worlds. Social FI, the financialization of social influence. RWA, the bridge that connects blockchain with the real economy. AI combined with blockchain, the rise of decentralized intelligence. And finally, Web3, the ultimate vision of an internet built on trust, transparency, and ownership. Each of these layers is not just a narrative. It's a stage in the technological and financial evolution of the digital economy. The crypto market is the first system in human history that combines programmable money, decentralized governance, and borderless access into one living organism. That's why it feels chaotic, because it's alive, because it's evolving faster than we can process. But if you learn to see its architecture, everything begins to make sense. When you look at charts, what you see are not just candles and numbers. You are looking at the movement of belief, of technology, and of liquidity across layers. When Ethereum rises, it means infrastructure is in focus. When DeFi pumps, it means capital is being deployed. When NFTs and GameFi explode, it means the cycle has reached the surface, and greed has taken over. And when everything collapses, it's not the end, it's the system taking a breath before the next expansion. Those who understand this rhythm don't panic when the market drops, and they don't chase when it rises. They recognize the stage, position themselves accordingly, and wait, because the market doesn't reward emotion, it rewards comprehension. The structure of the crypto market is the map of this new economy. The people who study it, not with greed but with curiosity, are the ones who will survive every cycle. They are the ones who see patterns where others see chaos. They are the ones who ride the flow, not the noise. In crypto, understanding is wealth, and those who truly understand the structure, they don't just invest in projects. They invest in the future of how value moves. This is the whale flow, where we read markets through logic, not emotion, where knowledge replaces luck, and where those who learn the structure today will own the economy of tomorrow.